10% payback based on their R&D expenses. So they think their last step is, running the payroll, hiring an employee, coming out with the product. We want to create the other last step, which is let's take a look at your expenses. Maybe beyond just having an expense on your profit and loss, we can convert that into an R&D tax credit. Let's start the planning. If we can use it for the payroll tax credit, that'd be great, or else against income taxes. So we do a lot of planning, phone calls, exchange information. So, and I would also want to say that we use technology. We do a lot of Zoom or in teleconference. We record a lot of our discussions and our interviews. Every single thing we do is to save time for the client.
Hey everyone, this is Devin Miller here with another episode of The Inventive Journey. I'm your host, Devin Miller, the serial entrepreneur that's grown several startups into 7- and 8-figure businesses, as well as the founder and CEO of Miller IP Law, where we help startups and small businesses with their patents and trademarks. If you ever need help with yours, feel free to go to strategymeeting.com, and we're always here to help. Now, today we have another great expert episode today. It'll be with Michael and Eric Procaccini, or as close as I can to pronouncing their name. But a few things that we'll go over is one that is maybe not as sexy of an area as far as experts, but definitely has an impact both on the bottom line and one that can impact a business, especially if you're a startup or small business, which can be a lot to do with tax credits, and more particularly a lot to do with R&D tax credits. Kind of what is a tax credit? How do you get, how you might qualify, what you might want to consider, and kind of how you might anticipate that, and kind of and have a good discussion from there. So with that much as an introduction, welcome on the podcast, Eric and Michael.
Thanks for having us.
Yeah, thank you so much.
So now, before we dive into all of the excitement of tax credits and kind of what that all entails, maybe just give kind of the audience a 2 or 3 minute overview, a bit of your background, and a little bit why you're an expert and why they should trust and listen to you.
Sure. So thank you again for the time here today. And I'm going to go ahead of Eric, if you don't mind. I guess we'll start off with my credentials that I am a CPA, so I'm a certified public accountant, but I'm also a chemical engineer. So those credentials, and in addition to my experience, makes me considered an expert for the R&D tax credits. I was lucky enough to spend a little bit over 5 years working at a public accounting firm. So that's really where everything got started. And it's fabulous opportunity to learn how to manage clients. And also just a general intro into the different tax entities. So you have the C Corp, S Corp, partnership. And I did that for about 5 years. And then the last 15 years, I worked with a group in Montreal, focusing in on USA R&D tax credits. And then I was lucky enough to work with a group out in California. So that was my commute, right? From Rhode Island to California, about 1 weekend a month. And I would travel to California, and then I would travel up and down the West Coast, Palo Alto, San Francisco, and that was my intro and my experience with a lot of the startup companies, all the software. And so up until that point, I was mostly with manufacturing companies. So that was my intro into the software world. The summer of 2017, I decided to go on my own. And in addition to working on my own, last year I joined an exciting international group, FI Group. They're located in Paris, France. So I'm lucky enough to work with true global companies with the R&D credits and a couple of other tax incentives that we work with.
No, that was a great introduction. Definitely makes sense. And Eric is your son, if I remember right. So he works with you and does a lot of the legwork and setting things up and making sure things get through or get done as well. Is that right?
Yep, right on. Yeah, a little less exciting than my dad here, but just learning the ropes and following alongside him.
Well, that's awesome. And I've had an opportunity to work with my dad on several projects and different startups, and it's always a fun dynamic. Sometimes it can add a little bit of stress, but it also adds a lot more fun to it as well. So
yeah, definitely.
Well, maybe with that, let's dive in and chat a little bit about the reason of area of expertise, which is tax credits. So before we get necessarily into specifics of R&D tax credits, maybe just help people understand a bit of what is a tax credit or why they're offered or why they might consider it. Kind of then we'll get into the specifics on the R&D side.
No, that's definitely so. Like it's almost like an ideal client that they invest in innovation, technology, new or improved products. And even without the client even knowing about the R&D credit, they're in survival mode. They have to be 1 or 2 steps ahead of the competition. So even without the R&D credit, they're doing some things for themselves that they really need to do. Hire engineers, figure out their current products that they have or software. So it's so interesting that the R&D credit should be almost like an afterthought.
Well, maybe before we dive into R&D, let me back up just real quick, because tax credits, and you can correct me where I'm wrong, because I'm by far not an expert on it. I kind of or reasonably understand it, but a tax credit is basically where the government has different categories of qualifications that you can get reductions on your taxes, such that they're saying, hey, either we'll give you a credit so you don't have to pay as much taxes, or we'll reduce what you owe on your taxes because you qualify for different areas. Is that a fair kind of summary of what a tax credit is?
Yeah, it is. And we use the 10% rule of thumb. So if someone has $100,000 of R&D expenses, they'll get roughly a 10% or a $10,000 federal credit. It's almost equivalent to on a W-2, you have your federal withholding or you make your quarterly estimated payments. It's very similar to that. Yes.
Okay. So if, in other words, if it's backing that up just a little bit, tax credits, I should look and say, okay, there's a lot of different tax credits out there that can help me with my business. And so some of them can be, if you're to look at personal tax returns, it can be you have earned child income. That would be a tax credit if you have so many kids, if you're a parent, and depending on how you do that. Now, when you get into startups and small businesses, there's different ones, and different kind of thing, but similar to they have some of them that are for with COVID and that you can get for a deferral of how much you pay in I think it's the credits for how much you pay maybe for unemployment, or you can have different credits, or you pay for if you have different qualifications, one of which has been around for a little bit longer, certainly predates COVID, which is you keep referring to, is R&D tax credit, which is a lot of times applicable for startups and small businesses that are doing R&D, which is research and development. And so that's developing a product, figuring it out, or researching it, and then bringing it to market, and they give a credit for credit depending on if you qualify for how you're able to do that development, if you're incentivized basically companies that are trying to bring new products to market. So maybe talk a little bit about kind of the within R&D, because R&D can be very broadly used term within businesses too. It can everything from, R&D, if you were to ask a restaurant, they're saying I'm developing a new recipe, to a, technology company that's developing a new product, to maybe a medical company that's developing a new medical device. So when you look at kind of the R&D tax credit, what are things that qualifications that startups or small businesses should be considering? When should they start to look at it, and how do they qualify?
Right. Excellent. So I've actually nicknamed it the risk credit. So somebody starts off with R&D, they think about the white coats and in an actual R&D research center. But if you take a step back, really it's a risk credit. So somebody's taking a risk on hiring an engineer or buying a new kind of product, or they're trying to have innovation where there's a financial and technical risk where maybe it'll work out or maybe it will not. So people feel more comfortable. Oh, they don't really understand R&D, but the risk tax credit, Michael, as you're nicknaming it, I feel more comfortable with that.
So now you take that, and so my follow-up question to that is, so does any startup qualify? Meaning, if I'm taking, because I mean almost every startup takes some risk, right? In the sense that they're going out on their own, they're going to start or invest, either take their own money and invest it, blood, sweat, and tears. They're going to do starting up. Would a restaurant, a mom and pop shop, a technology company, and a medical device company all qualify, or there's some that qualify better than others?
Right. So if they have technical employees, so as you're going to find, we try to oversimplify everything. So instead of going through the IRS 4-part test and everything else, we start off with, is it a stable company? Is it stabilized? Is it making money? So we try to like circle the wagon. Do you have, by the way, do you have any engineers or a computer science specialists that work on your, and then I ask big questions like, well, why do you hire them? Oh, we hire them to solve our technical problems. And so really, we try to convince them that they're involved with the R&D cycle. So, and it's just a matter of having a discussion like we're having today. Ask the right kind of questions. And that way there, we feel comfortable about the R&D level, and then they do as well.
No, and I definitely think that makes sense. Now I'll follow up with another question, which is, what are some of the company, flipping the question almost a bit on its head, what are some of the companies you're saying you're going to have a difficult time qualifying, or you may not want to consider it? It may not suit you well. So that, what I'm trying to do is help. So, if you're a startup, you're saying, great, I can get a tax credit. Everybody wants tax credit. Nobody wants to pay any more tax. They want to pay the taxes their own because they don't want to get audited, but you don't want to pay more than you have to. But are there companies that are saying, yeah, if you're in this area or this area, you probably are going to have a difficult time, or you may not want to go down this route, versus, hey, here's a sweet spot. It sounds certainly like if you have engineers, software, technical people, that's an easier area. Are there ones that are more difficult to qualify on?
Perfect. So let's first talk about the 100% non-qualifying client, okay?
Okay.
They have no financial risk. They have no technical risk. They have no technical employees, like at all. And they've hired the right attorneys that have made sure that they take no risk at all. So the bottom line is heavy, their tax liability is heavy, and I cannot help them out at all. All right.
So now let's say I qualify for one of those. So I have risk. I'm putting in my own money. I'm putting my money or my savings at risk, but I don't have technical employees and I'm not solving a technical problem. Can you still qualify? Is it more difficult? Should you consider it, not consider it?
You need to have that, and it was the last point you made. You have to be connected to the sciences, the hard sciences, engineering, software, physics, medical. You have to have some kind of a hard science connected to that. So we're always trying to check the box, and that would be put them in a hard. I wouldn't be able to provide the credit really at all. They have to be connected to technology one way or another.
So in other words, and not putting words in your mouth, but putting your words in mouth, you have to have some sort of science, technical, or solving some sort of technical issue. Meaning, really, if you're a mom and pop shop that's opening up a small or convenience store, even though you have some risk involved, probably not going to have the technical people. Same thing on a restaurant, unless you're like an Uber or somewhere where you have software, you have Uber Eats or some of those different ones, DoorDash and that do have a technical aspect. But if you're opening up a new restaurant, those are incredibly risky because a lot of them don't make it, but it doesn't have that technical aspect. On the flip side, if you're doing, whether it's software, you're doing electronics, you're doing some medical devices where it has some hard sciences to where you're going to have to invest with, have employees or independent contractors or different individuals that are going to be doing a lot of that research and that development, then you'd be a reasonable candidate. Now, one question to follow up on that, is it too early? Meaning, let's say I come up with the world's best idea for the next, whatever device it is. I'm going to create the next iPhone that's going to just knock everybody's socks off of. And I get my LLC or my S Corp, my C Corp, whichever it is, set up tomorrow. I go get investment dollars and I hire 20 engineers. Can I and do it this year? Can I get started, or when should I get started? How early in the process or late in the process should I consider it?
It's probably the sooner the better, the early planning stages. There is some, as far as the R&D credit, as the IRS never lets us down, right? They want documentation, they want evidence, so you're better off starting it as soon as the R&D cycle starts out, because the information's fresh, the project list is fresh, everything's right there. So right now this is 2021. For us to go back and do an R&D credit for 2019 and 18, the information gets diluted over time. So I'm better off getting involved early on. And a couple of, as far as the startup companies are really an ideal situation. So we have a general definition of a startup, but the IRS has a startup where they have a 5-year rule. Year 1, 2, 3, 4, and 5. will create the R&D credit, and they can check the box and elect to use the R&D credit against payroll taxes.
Okay. Now,
So,
another, and I'm just kind of a lot of different questions that I'm anticipating people would have. Does it necessarily matter if you have, whether it's an employee and it's, 1099 employee versus an independent contractor versus a part-time for full-time? Do those matter as far as the IRS are qualifying for the credit, as far as which type of employees you might have?
no, and that's a great point. So if they can have employees or they can have contractors. We go through the interview process the same exact way. They get the bigger bang for the buck with the W-2 wage earners, but the startups, they have so many things to worry about, and hiring somebody is usually low on the list, right? So they have outside contractors, they pay them a 1099, and that could also provide the R&D credit for them as well.
Okay. So in other words, while 1099 might be a bit easier, you could certainly, even if you have independent contractors or other arrangements with employees, you could still qualify. One other question that comes up, and then I'll hit on, or one of my questions I like, which is intellectual property. But before I hit there, let's say I've been doing an R&D project for 2 or 3 years, and I just heard this podcast episode, or I just found out about your specialty or any number of things. Can you go back and recapture some of that credits, or is it only moving forward? Meaning, hey, I've been doing this for 2 or 3 years. I didn't realize I qualified. Is there any way to recapture that? Or is it more, hey, now that I know about it, I can capture it going forward?
Yep, no, great. So, even like an individual tax return, you have 3 years from when you filed it to go back and amend. And that's what really opens up the opportunity to go back for the prior years. So the answer is yes. Yes, definitely go back if it's available. And part of the planning is to really figure out that whole net benefit. It's one thing to do the credit for the prior years. There could be an audit risk that has to be managed and understood as well. It's so much easier to do it in the current year where the audit risk is, I think, less than 1 or 2% for the R&D tax credit. The prior years, it's somewhat of it's not an audit risk, but it's a flag item. You're amending the return for one reason for the R&D tax credit. But if you've earned the R&D expenses and you've earned the R&D credit, you have nothing to hide. It's definitely worthwhile.
Okay.
For sure.
Now, one additional follow-up, and we chatted a bit about it, and certainly an area that I'm a bit biased towards, which is intellectual property. And I think you talked about that as one of the places that it helps to qualify, or you can show that as part of the R&D. Is that right?
Yeah, it's so true. And the IRS they have safe tax harbors, and they have it for the R&D credit, and they only have 2. And one of them is the intellectual property. So it's not required to have intellectual property, but if you're involved with R&D activity and some of the activity is connected to intellectual property, it's a safe tax harbor. The IRS will lightly review everything because it's so much more difficult to get IP than it is to have R&D. So if we can make that connection between the R&D and the IP, it's a really nice, secure way to have the credit, and you're building a very easy audit file. A lot of advantages having IP.
All right, awesome. Well, that's just another reason to get intellectual property, because it makes the audit trail all the easier if you ever get audited, and also it substantiates it. So just for everybody listening, go get as much IP. No, I'm just kidding. I was going to say go get as much IP as you can, but do it as it makes sense. So now talking a little bit, we've kind of gone through a bit of what the tax credit is, some of the qualifications, what you might consider. Now, you've done this for a period of time, and you've also, full disclosure to the audience, you've done it for us as well for one of my companies, and it was a great experience. But as you do it, you mentioned a little bit. We talked a little bit about different companies you helped, and that. Give us an example. Is it, hey, this is going to save me a few $100s to hundreds of thousands or millions of dollars, or kind of what should they anticipate? And is it worthwhile for startup or small businesses time to put in the time? Because it does take a little bit of time and expense. You want to make sure to keep the audit trail. You want to make sure to substantiate it. You don't want to just put your, put your finger up in the air and make a guess, but you want to actually have it substantiated. So give us people a bit of an idea of kind of what they might be looking at as far as why it might be worthwhile.
Yeah, maybe we can just go through a couple of quick case studies. So working with a manufacturing group out in California, and 2020 was actually year number 7. So we provided a really very, very good R&D tax credit. It was federal and state. So California has a strong state credit as well. And I believe the credit was about $40,000. There's about 25 federal and the rest California. And it was very humbling engagement where they were going to use that R&D credit as a reason to hire someone. So that's really to provide the credit, not only to save taxes, but to justify hiring somebody else. It's very meaningful to us. Another case study is with a software company that was year number 3. And they're a C Corp, they had net operating losses, so we're able to do the R&D credit for 2020, 19, and 18. And with special rules the IRS has, we just reported all 3 years of R&D credit on the 2020 tax return. So in that case, they did not have to amend,
Okay.
at all. So I think the credit was a little bit higher there. They hired about over 20 software engineers, and that the credit was, I think it was over $200,000.
Oh, cool. Definitely worth the savings and worth a little bit of effort to do that. So now if people were to, they're thinking about it, help them understand. So full disclosure, you're also, we're setting you up as people may have caught, we're doing what's called the strategy on demand sessions where they can, get a half an hour of you guys' time to kind of talk through, see if they qualify and what makes sense. But let's say they come and they sit down with you for half an hour, kind of chat through what they have going on, see if they lines up and makes sense. They do that through the strategy on demand or otherwise or connect up with you. As far as I'm a big proponent of, transparency and cost, how much it's going to cost up front, all of Miller IP law stuff. You can go on our website and you can see exactly what our flat fees are, what everything costs. So if they were to approach you and they say, hey, I assume you guys don't want to do it for free for everybody. I'm sure everybody would love it, but I assume that you actually guys want to stay in business and make money yourselves. So if people were to say, okay, what is this going to cost me? And kind of how long does it generally take? Kind of what are those two criteria?
Oh, that's great. So we really have two sets of clients. One that's not only new to us, but they're new to the R&D credit. So with them, we'll typically start off with maybe a 20% fee. Okay, so we're almost like a finder fee. We try to come up with maybe a 20% fee of whatever that net benefit is, but we try to move like the very next year into a flat fee. All right, so there's no sticker shock, there's no element of surprise at all. Then we have our other clients that they're familiar with the R&D credit, and they're already familiar with a different kind of a pricing structure. So we'll ask about that. If we're able to duplicate that, then we'll do that as well.
Okay, so it sounds like there's a couple different options. If they're already fairly familiar with it, you guys will set up at what would be a fair, reasonable price. For the people that are new to it or otherwise doing, usually year one, there's a percentage that you'll take. Afterwards, it'll move to a flat fee. Is that about right?
Yep, and then we also have, it's a little bit corny, but we always talk about, we want to take the journey with them, especially for the startups. If the money's a little bit tight and the credit, they don't utilize the credit in year number 1 and you have to do a carry forward, then we want to have that discussion. So we want to have our deliverable, want to have our fee, but the actual payment, we want to have a lot of flexibility with that. If they're going to use it 2 or 3 years down the road, we'll take that journey with them. We don't want them to worry about paying us. It's more important to get that R&D reported as currently as possible and just contribute that way.
Okay, perfect. Definitely makes sense. And now I think the last question, maybe or maybe not. I always say last question. I always have more questions. But one of the last questions, and maybe I should start saying one of the last questions, that works better, is, as far as the length of the process, are they looking at, if they were new to it, they hadn't gone through it before, are they looking at a day, a week, a month, a year, kind of how long should they anticipate kind of, or how many hours or whatever is a fair way to measure it as far as going through the process with you guys?
Wonderful. We try to do a 4 to 6 weeks. So week 1 and 2 is exchange of information. Week 3 and 4, some interviews, really coming up with like a draft calculation. And then week 5 and 6, we want to review our calculation, convert it from a draft to a final, have a report. So we like to say we want to just visit them. We don't want to really move in with them. So we want to have a start date and an end date so they can actually check the box. Hey, Mike and Eric did a great job. The R&D credit's all done. And then we want them to move along with their lives with their operation and everything else here. So that's how we try to do it, 4 to 6 weeks.
All right, definitely makes sense. And yeah, no, I'm guessing that as much as people don't typically, although I hope I'm the exception, don't want to go see a lawyer. Typically, my experience is they don't like accountants and tax people any better because they're wanting to focus on the things that find fun and the thing that's exciting for them. So I think that that's definitely a reasonable time frame. And when we went through with one-on-one business with you guys, it was a fairly non-invasive. It wasn't an overly burdensome, and it was a fairly quick and easy process. And so definitely would recommend it. Well, as we wrap up, and I always ask one question at the end of each expert episode, and we're kind of reaching that now, which is if, with the R&D tax credit, if you're talking to someone that's in a startup or a small business and they only could take one step to get closer to getting going, aside from talking to you guys, which I'm sure would be the first step, but if they're to say, hey, I just want to take a look at this, I want to understand it, I want to get going, what would be the one piece of advice or one action item that you give them to start getting things kicked off?
That there's a 10% payback based on their R&D expenses. So they think their last step is, running the payroll, hiring an employee, coming out with a product. We want to create the other last step, which is, let's take a look at your expenses. Maybe beyond just having an expense on your profit and loss, we can convert that into an R&D tax credit. Let's start the planning. If we can use it for the payroll tax credit, that'd be great, or else against income taxes. So we do a lot of planning, phone calls, exchange information. So, and I would also want to say that we use technology. We do a lot of Zoom or in teleconference. We record a lot of our discussions and our interviews. Every single thing we do is to save time for the client.
Awesome. Well, I'm sure they definitely appreciate that as everybody always has more things to do than time to do it. So that's awesome. So,
yes.
Well, as we wrap up, definitely one option that people, if they want to reach out, they can go through the strategy on demand. They can sign up there. If they want to reach out to you directly or otherwise find out more about you guys or anything of that nature, what's the best way to find out more, reach out to you guys, or otherwise get involved?
Yep. They can contact Eric.
Yeah, probably either usually LinkedIn. LinkedIn's always good. Pretty active on there, and then our website as well, algorithmtaxgroup.com.
All right. Well, I definitely encourage people to either check you guys out on LinkedIn, make those connections, go to algorithmtaxgroup.com, or use Strategy on Demand, any which will make sure to help you get those tax credits. Well, thank you guys for both coming on. It's been fun. It's been a pleasure. And most people don't usually say that when you talk about taxes because it's usually not fun or a pleasure, but I've been enjoying having you guys on. I appreciate all the expertise you guys have shared. Definitely an area where I think people can have some savings and benefit their business. Now, for all of you that are listeners, if you have either expertise you'd like to share or a journey you'd like to share on the podcast, feel free to go to inventiveguest.com and apply to be on the podcast. Two more things if you're a listener. One, if you are a listener, make sure to click on subscribe on your podcast player so you can get notifications as all of our awesome episodes come out. And two, leave us a review so new people can find out about the podcast. Last but not least, if you ever need help with your patents, trademarks, or anything else, reach out to us at Miller IP Law by going to strategymeeting.com. We're always here to help. Thank you again, both of you, and wish the next leg of your journey even better than the last.
All right, thank you. Same to you.